Yeah.
Tom, I want to kind of stay with that line of thought and talk about the economic landscape that you just alluded to. I think it's a hard one for us to interpret and make sense of, and yet it's the most important actor in this stage in terms of its influence in EB-5 and in the political advocacy, I think. So, help us understand, unpack for us what's happening in the economic, commercial backdrop in a way that we can understand, and what does it all boil down to for investors?
Well, I, I think from a big picture, and I think we can go down is there's a lot of uncertainty in the market now. I mean, there is the inflation factor, interest rates, tariffs, political, uncertainty, all those things. When you have that kind of level of uncertainty, people are nervous. They don't know what to expect, and business people do not like uncertainty. You couple that with the interest rates that are really high, and importantly, there's a liquidity crunch out there too. So capital is much harder to get now. The past 10 years, 2 years, you've had, inflation and a lot of deals that typically in the past would have returned capital at this point are being extended. There is, and that liquidity usually gets into the market and gets reinvested. I've read somewhere there's over $1 trillion that's stalled in these investments. We're seeing a lot, so EB-5 actually becomes much more important, also a lot more risky for investors
Wait, can you
because
help us understand that? So if I understand you, you're saying that so these capital actors are making capital available to developers and others, and they would have been expecting a return of that or a repayment of that or some realization of that, but that's not happening.
that's not happening.
Oh,
Buyers and
why
sellers
why isn't that happening?
because I think that the sellers are still living in the past where they're saying, we want a higher return. They're not recognizing that there's a real discount factor. And then people who are a lot of private equity, whatever, they could lose money right now trying to sell assets. There's just not enough liquidity. And so people are holding those assets. These deals that happen with interest rates where they are now are not, they don't pencil out the way they did when interest rates were much lower. And so what you're seeing is a lot of funds that are holding their capital. We've seen deals where funds had never not been able to raise, equity, who are now saying they can't raise it. We've seen that in deals that we've done. You're seeing even deals. There's a lot of renegotiation of deals. I think Ernst and Young did a study that's 30% of deals now are being renegotiated midstream. That is a sign of fear and uncertainty, and it creates, a lot of concern. And basically, there are, some projects are being withdrawn. I never saw so many delays in project financing or equity people backing out of deals that they initially committed to. So there is something going on there that I think is material. And I think it will have a huge impact on EB-5 because, sponsors and people are going to go to EB-5 because there's such demand for this immigration visas right now. And they see this as a huge opportunity. And you're seeing sponsors, go to EB-5, maybe ask for a much higher percentage of EB-5, maybe, just kind of it's EB-5 is playing a much more risky role in this environment.
Help us
And I
help us understand this. So, yeah, the layperson's perspective on all of this. So, what I'm understanding from you is that typically folks in the capital market who have something to sell and thereby raise additional capital are not selling, but it's not because they don't want to, it's because there are no buyers. Is that right? So that part
There's
I
no bar the prices that they're looking for. And again, that's not the whole market. There are things
yeah.
selling. There's a significant amount of
Okay.
capital
And
that's been
and so if people are not buying, that does indicate a loss of confidence. People don't want to spend their money to buy these other assets that in a more favorable environment they might have otherwise. So the folks who are trying to raise capital through normal means are unable to. Therefore, they're turning harder to EB-5 capital to fill the gaps. Is that
One, yeah,
is that
and
the
in yeah, yeah, it's much. I mean, EB-5 is not that big a player in the whole capital stream, but EB-5 has become. You can see it's just not when you're not getting capital traditional ways, and EB-5 is available, particularly in this environment where people really want these visas and they're willing to take a little more risk. Then sponsors are taking advantage of that.
which is why you thought this was like the 2008 the Great Recession
I
situation.
think yeah, I don't think we're at 2008, but I think you're leaning there. And again, that's just one factor, but that illiquidity is a function of all the uncertainty. Is inflation going up? Is it down? Are tariffs going to happen? What's that impact? Again, what's the political uncertainty? Everybody is on hold because nobody wants to make right now you're guessing a little. So there's a lot of factors. If there's more certainty in the market, then I think you would see that liquidity come in. But right now that's where we are. And I think a lot of deals that penciled out 3 years ago when interest rates were so low don't pencil out anymore. And refinancing is much tougher. Banks are much tougher. And so it's a different kind of environment. And there is a liquidity crunch right now.
So
Tom,
I
what
would imagine. Yeah, please, Ira.
no, I was just gonna ask the question, what about just doing smaller projects involving EB-5 in rural areas as opposed to trying to use that EB-5 capital as part of a stack of capital for a much bigger project? I mean, wasn't the idea originally that that's what would happen? You'd get 10 people together, you'd have a $10 million project, not as a part of a stack of $100 million project, but just build $10 million projects in rural areas and maybe some infrastructure areas around the country.
I get, to me, EB-5, the safer deal, and the reason you saw why they needed this legislation to encourage people to go into rural areas was because, let's say, the safer deals tend to be in urban areas in big cities. That didn't always happen because there was some, people took advantage of that. But rural areas are more risky. There's less population, there's less economics there. It could depend on one business or one resort. If that goes down, rural areas, if you look at what's going on a macro level, it's compounded in rural areas. The rural deals, that's there's huge demand, but they are really the riskier deals. We're trying to do broadband things where we're not relying we're relying on government funds coming in. We're trying to do data centers. We're trying to do the bigger projects with bigger players because for me, historically, that's the safer place to be. So yes, I actually think what's happening at a macro level and impacting urban areas is even greater in rural areas. And there's a dichotomy because investors want the visa expeditiously, and that's one factor. But they're also taking overall, they're taking much more risk, and so I'm not. I don't know if I agree with you that I think it's more. I actually think there's a lot more risk right now. Not
So
all deal. You just have to be real careful.
So, Tom, I think we all would like to know, how are you navigating this incredibly difficult or challenging financial landscape to pencil out an EB-5 deal? That's great for your schools.
I'll tell you, first of all, I'll tell you what we're looking for. And I'll tell you, we're having a tough time finding deals. I mean, good deals. There's huge demand out there. Believe me, we could be selling hundreds of millions. And we're not going to do it because I'm not worried about selling something today. I'm worried about where we are 5 years from today because $800,000, people can say what they want. That's a lot of money for a lot of people. And so we would, we're not on the street. We've been off the street. We've got some big deals coming, but there's been 2, 3 months we couldn't find a good deal that we were comfortable with, that had a paper out the way we wanted to. But what I would look for, look, it's the same thing. What we're looking for. Sponsors got to have a good track record, but sponsors got to have a lot of money in the deal. Sponsors are going to be out there looking for deals. we're looking for 25, 30% equity. They have to have a lot of skin in the game. And you can't remember the J Peak stuff. You know, there was so much availability of EB-5 capital that people were trying to create projects based on the availability of capital. That never works. These deals have to make sense independent of the fact that there's all this huge source of capital out there, EB-5, and sponsors know about it. So I think that's really important to be careful, not just who the sponsor is, but they're also not, you want to make sure that these deals make a lot of sense. I've never saw in my life bad projections. Every projections look great. You better do some sensitivity analysis on these projections. Leasing doesn't happen the way it wants. The rents aren't going to happen. The cap rates aren't going to happen. So we you got to be more sensitive. You also, in this environment, you got to make sure the capital stack's really in place and there's completion guarantees. We've delayed or backed out of deals where we saw some of this equity was no longer in place, and we're not going to do that. We're using much more third-party feasibility studies, particularly in rural areas. We don't know those areas. We don't understand them, and they make me nervous in this environment. We're hiring consultants and specialists to go out there and really make sure that we understand what the market is and what the risks are. Um, don't If any deal that's over reliant on EB-5, that's a red flag. That's just a red flag. That is not what this program should be about. And you should also make sure, like distributions to these sponsors, they're last in line. EB-5 needs to be secure and safe before they start taking money out of these deals. So, again, regional centers and their credibility is really important, and track record. Everybody's going to tell you they're great. But those, this is not a time not to do deals. It's just a time to be more cautious and be realistic. And if agents are pushing rural deals, they're basically saying you want to get a fast green card. That's a but there is the risk factor, and I don't think people are dealing with that. We are, we're just, I'd rather lose that. We got here by trying to do the right thing and do deals like put my mother in, and we're not going to change that. But it's definitely a harder environment. That doesn't mean there aren't good deals out there. They just take longer, and you need to make sure all the pieces are in place. And we're just seeing delays in getting there.
Tom, what I'm hearing you, if I can just distill it, is when you're looking at deals, you're looking at, is this deal going to repay?
That's what I'm looking at.
Is this deal going to have enough liquidity, whatever it is, 4, 5, 6, 7 years down the road to repay?
Yeah. And then I can go to sleep, and our investors can go to sleep at night, and our agents can go to sleep at night.